I don't think anyone has in their models anything for ride sharing. And then as time goes on and we learn about their artificial intelligence expertise, the 30 billion miles they've collected of real world driving data, no one comes close, not even, I think Google might be at 30 million compared to 30 billion. And we know that in the AI world, and autonomous is AI, that the company with the most data and the best quality data will win. So we're pretty excited about autonomous, and the probability of success in autonomous, we believe, is going up, and therefore our price target will probably follow at some point. If all corporations in the United States were to put, I think it's 10% of their cash into Bitcoin, that alone would add $200,000 to the Bitcoin price.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm reacting to comments from Ark Invest founder, CIO and all-around badass Cathie Wood, sharing her thoughts on why Ark Invest is still buying Tesla stock, some additional thoughts around Bitcoin and the genomics revolution. So let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
She's been called one of the most disruptive and innovative forces in the ETF world today. She's also one of the most successful. Cathie Wood's signature Ark Innovation Fund returned an astounding 148% in 2020, and she says there's still a lot of runway ahead. Cathie's the founder, CIO, and CEO of Ark Invest, and she's with us now in our ETF Edge, along with Bob Pisani. Cathie, it's nice to see you again. Welcome to Halftime. Bob, why don't you start us off?
Cathie, great to see you, and what a tremendous year it's been for you. You now have over $50 billion in assets under management.
I'm so happy to see Ark Invest finally getting the credit they deserve. For those of you who don't know, I actually began purchasing some of Ark's ETFs almost half a decade ago. At that time, I think they would have been lucky to have a few $100 million in assets under management. It's not until June 2018 that Ark Invest passed the $5 billion in assets under management mark, and we've seen a 10x from there. Crazy inflows into the ETFs. Why? Well, they've been right and right some more. People are finally starting to recognize that they know what they're talking about, they understand what they're doing, and investing in disruptive innovation is the future. Out of interest, let me know in the comments below if you currently own or if in the past you've ever owned any of the Ark ETFs, and if so, which ETFs. Right now, the only ETF of Arks that I own is the Ark Genomics ETF. The ticker there, ARKG. Either way, I'm so stoked to see these guys and girls finally getting the credit they deserve.
And your flagship Ark Innovation Fund's up nearly 20% this year alone. But I've got to start with your biggest holding. It's Tesla. In the Ark Innovation Fund, it's also in the Next Gen Internet Fund. It's also in the Technology and Robotics Fund that you run. How do you feel about Tesla's price now? And are you still adding to your position?
Yes. Well, as you know, we report our trades every day, and you will see that we have been adding to Tesla.
So there you have it, folks. Ark Invest still buying Tesla stock. Same with this guy here. I posted about this recently. I kind of thought I was done buying Tesla stock, to be honest, but I still see enough potential there and I can't find better opportunities elsewhere. So I am still continuing to buy a little bit of Tesla stock here and there.
Our confidence in Tesla has grown as we've done research on what ride sharing potentially could add. It could limit the risk significantly. It's a much more profitable business than electric vehicles. And we do think, even though I think there's some debate at Tesla whether or not they should launch a human-driven ride-hailing network, it would be a very good bridge, we think, to their autonomous strategy, and we think they will decide to do that. I don't think anyone has in their models anything for ride sharing.
Spot on from Cathie Wood here. Many, in fact, most of the so-called analysts, using the term relatively loosely here because they're not doing a whole lot of analyzing, they're doing a whole lot of projecting and assuming and not a whole lot of thinking, reasoning and analyzing, but that's for another video. Most of the analysts who are modeling Tesla today are doing it solely on electric vehicle sales. They're missing 2 enormous pieces of the puzzle: autonomy and energy. Elon Musk himself has said in the future he believes the energy business could grow to be about the same size or larger than the automotive business. And then on top of that, we've also got the ride-hailing opportunity, which we know will dwarf both of these elements. The fact that so many analysts today are modeling Tesla solely on electric vehicles when these two obvious elements of the business, energy and autonomy, are there is just baffling. But then again, this is creating buying opportunities. I think in a few years' time, Tesla's going to be a multi-$1,000 stock. Everyone's going to look back at today's prices and think, damn, Tesla was close to $800. Wait, $700 only a year or two ago? What the hell were people doing not buying the stock? The exact same thing that's being said about the people a year ago.
And then as time goes on and we learn about their artificial intelligence expertise, the 30 billion miles they've collected of real world driving data, no one comes close, not even, I think Google might be at 30 million compared to 30 billion. And we know that in the AI world, and autonomous is AI, that the company with the most data and the best quality data will win. So we're pretty excited about autonomous, and the probability of success in autonomous, we believe, is going up. And therefore, our price target will probably follow at some point.
Once again, Cathie and I are on the same page. In fact, I covered this yesterday in my deep dive into deep learning from Ark Invest Big Ideas 2021 report. I'll put a card in the corner if you guys want to check that out. In my opinion, the solving of fully autonomous vehicles is now just a formality. It's just a matter of time. Tesla has an unassailable data lead. They've got the best quality data and by far the most data. They got the quality and the quantity. It's now just a matter of time. And some interesting news there. We already knew that Ark Invest was working on an updated valuation for Tesla stock, but Cathie has practically confirmed now that there will be a new price target on Tesla stock from Ark Invest.
Bitcoin is on everybody's mind right now. Your next-gen internet fund has a very large position in the Grayscale Bitcoin Trust. Your thoughts on this? Your thoughts on Bitcoin, a Bitcoin ETF for 2021? Is it coming? And do you have any concerns that the Grayscale closed-end fund still trading at a pretty significant premium?
Well, the premiums come down quite a bit. I think now that we know that the next SEC commissioner is going to be David Gensler, who spent the last few years at MIT teaching a class about blockchain technology, Bitcoin. I think he understands the technology and he understands the currency itself. So I think the probability of an ETF has gone up. We also know that the director of research for crypto in the crypto space at the SEC has been promoted and will be reporting directly to Gensler. So again, I think we have individuals now involved who really understand the space. And I think the likelihood has gone up. What has surprised us, we expected institutional interest to pick up this year, and it certainly has. But the way in which it's picked up has surprised us. I don't think we ever thought there would be broad-based substitution of Bitcoin for cash on corporate balance sheets.
I have to admit, I was quite skeptical and doubtful that there would be major corporations around the world converting some of their balance sheet to Bitcoin. In fact, I was very doubtful that Tesla would purchase Bitcoin until Elon started dropping hints. But here we are, Tesla now really leading the way. And I understand a few other companies like Square began converting their balance sheets, at least portions of their balance sheets, to Bitcoin earlier. But Tesla's a mega cap company. They have a huge amount of influence. And we can see it does appear that Tesla's purchase of Bitcoin has not only stimulated a huge amount of discussion, additional attention to the cryptocurrency, but also has actually driven the price of Bitcoin up double-digit percentages. Of course, we can never know for certain what's driving the price, but I have a funny feeling that Tesla's a primary reason why Bitcoin's gone on its latest run. Who knows where it'll end up in a week, a month, or a year, but as I mentioned recently, I won't be surprised if we see Bitcoin double, triple, or more over the near term. Not a prediction, just saying I won't be surprised if we do see this outcome.
So we find that very interesting. If all corporations in the United States were to put, I think it's, 10% of their cash into Bitcoin, that alone would add $200,000 to the Bitcoin price.
Imagine that, Bitcoin at $250,000 each. And of course, I can't pass up an opportunity to once again plug the merch store. If you'd like to pick up your own Tesla plus a Bitcoin to the moon shirt, long sleeve, hoodie, or mug, there's a link in the description. Check them out.
Now, we obviously do not believe this is going to happen very quickly. We're talking about maybe the equivalent of $900 billion market cap equivalent for Bitcoin. That's less than half the price of the Apples and Amazons of the world. So this has to mature a little bit before broad-based adoption can take place. But we're very reassured that companies like Square and Tesla have chosen to allocate. They're on the right side of change when it comes to innovation, and therefore we think it's wise that they diversify some of their cash. And I think the biggest surprise to many Tesla doubters is that it is now in a position where it has that much cash that it is diversifying.
And for what it's worth, since Tesla purchased their Bitcoin, around $1.5 billion of Bitcoin, and then announced that decision, Bitcoin's price has appreciated about 50%, which means even the skeptics who thought this was an extremely high-risk bet have a little bit less to be concerned about. Bitcoin would have to crash in double-digit percentages just for Tesla to get back to where they started with their so-called investment. Keep in mind, Tesla announced that this wasn't just an investment, but they're also planning to take payments in cryptocurrencies in the near term, which means they need a little bit of liquidity in cryptocurrency anyway. So this wasn't just Tesla betting that Bitcoin's going to go up. They're actually going to be accepting payments. They'll need to have some Bitcoin to offer refunds, these kind of things as well.
Now, you've been directionally right on a number of other big stock bets, including Teladoc. This is your largest holding in the Genomics Revolution Fund you run. It's also a big holding in the Innovation Fund. It's up about 40% this year. It's got a $40 billion market cap right now. This is telemedicine. Is telemedicine really going to continue to shine once COVID recedes?
Well, we had a great opportunity to buy into Teladoc when the stay-at-home stocks were starting to flatten out as the vaccine was on the horizon. Teladoc was one of those stocks, and it then was hurt by an acquisition it made, Livongo. This is a beautiful acquisition for Teladoc. The most important variable, again, I'm going to come back to AI over and over again, because we think that is going to represent $30 trillion in market cap during the next 10 years. And we are just beginning. So with Livongo, Teladoc now has one of the best artificial intelligence teams and some of the best data. That's the other thing we'll come back to. Most data, best quality data. And we think the combination of Teladoc and Livongo is going to be a powerhouse. One services more the acute setting in medicine, and that would be Teladoc itself primarily. And Livongo is more involved on the chronic side. So chronic conditions, kidney conditions, mental health, and so forth. So we believe that with this data, these two companies, now that they're together, now that they put their AI teams together, are going to be able to help make the healthcare ecosystem better, cheaper, faster, more productive, more creative. What we say about all kinds of innovation, they're in a beautiful position to do this.
And for those of you playing along at home, we're now looking at the current holdings in the Ark Genomics ETF, ordered by weight. This is current as of yesterday, the 17th of February 2021. You can see Teladoc over 8%, Pacific Biosciences almost 6%, Twist Bioscience almost 5%. Then we've got a bunch more in the 4 to 3% range, running down to 2%. And funnily enough, two of ARK's highest conviction stocks around 2 years ago, CRISPR Therapeutics and Invitae Corporation, now represent less than 3% of the Ark Genomics ETF by weight.
Cathie, it's not just Teladoc. This is Scott now. It's not just Teladoc out of your signature innovation fund that has enjoyed spectacular gains over the last year. I'm looking at the list of your top holdings, whether it's Spotify or Shopify or Zoom Video, for example. The gains have just been tremendous. I'm wondering what happens when we get on with the rest of our lives after COVID, and how do you think about taking profits, even though I know your typical sort of outlook is a 5-year time horizon? It doesn't mean you can't take profits every now and then and redeploy capital elsewhere to some of the laggards, perhaps. How do you think about that?
Sure. Well, the last year has been instructive. During the coronavirus crisis, we consolidated to our highest conviction names, especially those that were they were tormented by, I would say, algorithms who were looking for small cash cushions and cash burn. And so we had great opportunities to buy stocks at a fraction of the cost from just a month earlier.
Who else can remember March, April, May and June of 2020 when most stock investors were panic selling for a loss? Most people thought the world was ending and it was a disaster, something we'd never seen before. We'd never get over this. The economy would never recover from this, etc. And just a few beacons of reason, this guy included, feel free to scroll through my old videos to verify, was saying, hey guys, the world isn't actually ending. In fact, there's great investment opportunities, especially in disruptive innovation, and I for one am personally buying. In fact, I remember distinctly posting about this on social media and getting destroyed by professional snowflakes, professional victims, and those who get offended for a living, who somehow conflated me pointing out some opportunities in investing, the stock market, hey guys, you might be able to make some money during this chaotic time, with being an insensitive prick who wanted people to die of this illness. Of course, this is to be expected from professional victims. You know, the folks that don't take any personal responsibility, always looking to blame something, anything other than themselves. It's the weather, it's taxes, it's the economy, it's their boss. Definitely got nothing to do with them. And I can all but guarantee you, everybody who got offended by people pointing out investment opportunities during the pandemic has a broke mindset, has no money in their bank account, is going to stay broke until they change the way that they think. Anyway, that was today's lesson on mindset. Moving along.
Certainly Invitae and Zillow were two of those stocks. And then they've had magnificent runs. Many, Square would be in this category as well. Many are up 5 to 10 times. Tesla is also in that category. There was a lot of fear about its condition.
So I hate to be that guy. Who am I kidding? No, I don't. But if you'll recall, I repeatedly stated in no uncertain terms when everyone was freaking out thinking the world was ending, they were super fearful about Tesla and Tesla stock was falling as much as airlines. What the fuck, guys? Seriously? Like, hello? I stated repeatedly in multiple videos in no uncertain terms, guys, Tesla is going to gain relative market share during this downturn and they will still sell all of their production. And what happened? That's right, exactly what I said. Now, the reason I make these audacious, hyperbolic, ridiculous, impossible to know claims ahead of time is so that when they come to pass, I can point back and go, hey guys, hate to be that guy, but I was right again. Helps build my credibility. I mean, I'm just being honest with you guys. I don't know, maybe I'm overcompensating. Maybe I've suffered some traumas over the last decade or so, identifying great investment opportunities, having a high level of conviction, going all in, then screaming from the rooftops to everyone who'll listen and plenty who won't. Hey guys, I see a huge opportunity here. I recommend you investigate. Maybe you'll draw the same conclusion as me. Please look at it. And everybody in response saying, dude, you're fucking crazy. No way you're going to lose all your money. You're an idiot. I don't know. Anyway, I didn't think this would turn into a therapy session, so let's move on.
And then what you saw was the stay-at-home stocks start to flatten out. So toward the end of last year. So some of the stocks into which we had concentrated our portfolios, they were up, as I mentioned, 5 to 10-fold. We started moving back into these stay-at-home stocks because it seems to us that many analysts and portfolio managers believe that after the vaccines make it through our population and the rest of the world, that these stocks will be done. We actually think that that innovation makes the world a better place generally in the ways I described earlier, and that the coronavirus has accelerated the shift towards these new ways of doing things, these new ways of spending time. So we were happy to get the reprieve in some of these so-called stay-at-home stocks in the last, I'm going to say 6 months. It really started in July, August, giving us time to move out of some of the names that had taken off and into those that were marking time. So that's what we do. We are considered a liquidity provider, which means when people are selling, we will be buying. And when people are buying, and these are investors and retail and institutional, we are likely to be taking profits, as you say. Taking profits is never a bad idea.
But can you envision owning, for example, a Zoom in 2 to 3 years? Or will you have moved on to something else because the world has changed?
Well, I think the world is changing because of Zoom. And I think we're going to be working very differently in the future. Sure, there's going to probably be a combination of in the office and stay at home, but now we know it's possible. We look at Zoom in the context of the tech stack. And if you look at the tech stack, the enterprise communications layer is the biggest. It's a $1.5 trillion layer. This is where Zoom is playing.
There's nothing like a bit of chaos to accelerate the adoption of disruptive, innovative technologies and new, better ways of doing things. I think practically every person on planet Earth got intimately familiar with Zoom over the last 12 months. Hope you guys have enjoyed this video. I'm a big fan of Cathie Wood and Ark Invest, as you guys will know. Once again, let me know in the comments below if you own any of Ark's ETFs. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.